Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer: True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex market. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the unemployment rate related to Australia, and the currency pair I'm going to focus is the AUD USD currency pair. The next one is the manufacturing sales M over M related to Canada, and I'm going to focus US dollar versus Canadian dollar currency pair. Okay, let us start with the first one, the unemployment rate, Australia. What is the unemployment rate in Australia? The unemployment rate measures the percentage of Australians who are without work but actively seeking employment. It is a key indicator of economic and labor market conditions, showing how strong or weak the labor market is and how it may influence monetary policy by the Reserve Bank of Australia. A higher rate signals slower growth and can put downward pressure on the Australian dollar as it increases expectations for possible Reserve Bank of Australia rate cuts. A lower rate reflects stronger job creation and confidence, which often supports the AUD against the US dollar currency pair. Now, the financial news events details. The date and time is November 13th, 12:30 a.m. UTC time. The previous number we got was 4.5%. Forecast is 4.4%. The actual number we got is 4.3%. So the Australia's unemployment rate released at 12:30 a.m. UTC time. Forex markets had expected a slight improvement to 4.4% from the previous 4.5% number. Forex traders were watching closely to see whether the labor market showed resilience or signs of cooling. The release had the potential to influence short-term moves in AUD-USD currency pair, since labor market strength is a key consideration for the Reserve Bank of Australia when assessing monetary policy. The Australian labor market had remained relatively firm though recent reports showed some moderation in hiring due to higher borrowing costs and global uncertainty. With the actual rate of 4.3%, the financial data came in stronger than the forecast. A lower than expected unemployment rate signals firmer labor market conditions, which can reduce market expectations for near term Reserve Bank of Australia easing and supports the Australian dollar. Now, if the figure had matched the forecast at about 4.4% number, market reaction would likely have been muted, reflecting a stable but not overly strong labor market. Now, if the rate had risen above 4.5%, that would have pointed to a cooling labor market, which could weaken the AUD as expected for Reserve Bank of Australia easing grew. Now, what happened is that in reality, if I show you the chart of Aussie dollar currency pair, this is what we got. Right over here on November 13th, price was tried to rally up and then dropped inside AUD USD currency pair. The unemployment rate is a primary gauge of Australia's economic health and a significant input from the Reserve Bank of Australia's policy decisions. A stronger reading, such as the actual 4.3%, reinforces confidence in the labor market and can support the Australian dollar. A weaker reading would have increased speculation of future rate cuts and weighted on AUD USD currency pair. Forex traders should consider the headline number together with participation rates, employment trends, and wage growth for a clear read on how the Reserve Bank of Australia might react in the coming trading months. Now, the lower unemployment rate tends to be AUD USD bullish, higher unemployment tends to be AUD USD bearish. Now, what happened is that we actually got a drop in market inside AUD USD currency pair. So the unemployment rate we got is 4.3%, which is a good number. That is why it's written in green color. Okay. Now the expected increased volatility around the release. That's what I was expecting. So market actually rallied up first and then created a spike, and then we got a drop in price action of AUD USD currency pair. If we go to a smaller time frame, this is the 13th November. So first market rallied up over here in this 1 hour time frame, and then we got the drop in the market. So Forex traders should watch the first few minutes for rapid price action and then monitor follow through on volume for confirmation. So despite the stronger than expected unemployment print of 4.3%, AUD USD currency pair moved overall to the downside after the release. First, it did go up, but after that, we got a drop in the market. Consider examining intraday liquidity flows, positioning, and any concurrent data or commentary that may have influenced the downside reaction. The next one is the manufacturing sales. M over M stands for month over month, and we're going to discuss the US dollar versus Canadian dollar currency pair. Now, what is the manufacturing sales M over M in Canada? The manufacturing sales report measures the month to month change in the total value of sales generated by Canadian manufacturers. It is an important gauge of industrial activity and overall economic momentum. Stronger than expected sales indicate rising demand and improved business confidence, which tend to support the Canadian dollar. Weaker sales suggest softer production and slower economic conditions, which can put downward pressure on the CAD against the US dollar. Now, on November 14th at 1:30 p.m. UTC time, we got the report, and the actual number we got is 3.3%. The forecast was 2.8%. The previous number was even, minus 1.1%. The Canada's manufacturing sales report released at 1:30 p.m. UTC. Forex market were expecting a strong rebound of about 2.8% following the previous decline of minus 1.1%. This report is um, This report is closely watched because it reveals the strength of Canada's manufacturing sector, which plays a major role in the country's economic performance and can influence the Bank of Canada's policy stance. Now, let me show you the chart of US dollar versus Canadian dollar currency pair. Now, over here, we got the data report release. We got kind of a mixed, sideways price action. Overall, USD CAD rallied up. The Canada's manufacturing sector has been pressured by higher borrowing costs and weaker global demand, but some recent indicators suggested a possible stabilization path. With the actual reading coming in at 3.3%, the data was stronger than expected. A print above the forecast indicates improved uh, industrial activity and increased demand, which normally supports the Canadian dollar and could push the USD CAD lower. Now, what happened is that after the news release, USD CAD tried to drop a little bit lower, but then overall it rallied up after that in the coming trading days. This report provides a clear look at the strength of Canada's manufacturing economy. A stronger print reinforces confidence in the sector and can support the CAD. A disappointing outcome would have raised concerns about slower growth, putting upward pressure on USD CAD. Forex traders should also consider any supplementary details or commentary since they may offer insight into how the Bank of Canada views near term economic risks. Now, despite the stronger than expected reading of 3.3%, USD CAD moved up after the release overall. This suggests that Forex market participants may have been reacting to positioning, broader US dollar strength, or additional economic factors that outweighed the positive Canadian data. Now, let us take a look at previous week global market trends. I'm going to first discuss the euro dollar, and then we will also take a look at US dollar versus Swiss franc currency pair. So let us start with the euro dollar currency pair. Here is the chart of euro dollar currency pair. Now, this is the weekly time frame long term chart over here. And the way I see, we got this nice break to the downside, and after that, market is just showing some consolidation. As long as price action is staying above 1.1390 level, the trend is still up in long-term chart of euro dollar currency pair. Now, if you take a look at a daily time frame, in daily time frame, this is where we got a bullish breakout. Market rallied up a little bit, and now it's trying to drop. So it's quite possible that price action is going to drop first to retest this trend line, and then from these lows, market is probably going to rise back up over here in euro dollar currency pair. Next one is the US dollar Swiss franc. If you take a look at the US dollar Swiss franc in weekly time frame, we got this bullish breakout, then a retest right at this broken trend line. Now it's quite possible that US dollar Swiss franc wants to go up over here. Okay, so it's quite possible that in next coming trading days, US dollar Swiss franc is going to show some strength over here, and we might get a bullish price action inside US dollar Swiss franc currency pair. If you take a look at a 4-hour time frame, over here, market tried to break below this trend line, and we got kind of a false breakout, and then US dollar Swiss franc rallied back up. So the way I see a market is probably going to rise up more over here inside uh, US dollar Swiss franc currency pair. And let me change the color of this trend line. So the way I see the US dollar Swiss franc currency pair looks a little bit bullish, and euro dollar is probably going to drop. more. Next, let us take a look at current week macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the Consumer Price Index CPI YoY related to UK, and I'm going to focus on GBPUSD currency pair. The next one is the German Flash Manufacturing PMI report related to Europe, and I'm going to discuss the euro dollar currency pair. Okay, let us start with the first financial news. Consumer Price Index, also known as CPI. CPI is just an abbreviation, a short name. Y over Y stands for year over year. So, what is the CPI? The Consumer Price Index, also known as CPI, year over year measures how much the average price of goods and services in the United Kingdom has changed compared with the previous last month or previous last year. It is the primary gauge of inflation in the UK. Higher than expected CPI can support the British pound as it signals rising inflationary pressure and increases the likelihood of tighter monetary policy from the Bank of England. Conversely, lower CPI suggests easing inflation, which may push the GBP USD currency pair lower. Now, the financial news event details are that on November 19th, at 7 a.m. UTC time, we will get the news release. The previous number, the CPI previous number is 3.8%, forecast is 3.5%, actual data not yet released. The market is closely watching the UK CPI release scheduled for 7 a.m. UTC on November 19th. Let me also show you the chart of GBPUSD currency pair. Here's the chart of pound dollar currency pair. Forex traders are looking for signs of inflation pressure in the UK economy as this figure directly impacts expectations for the Bank of England's interest rate decisions. A CPI reading above the forecast of 3.5% would indicate stronger inflation and could strengthen the British pound, while a lower figure may indicate softer price pressures and lead to short term weakness in the GBP/USD currency pair. The UK economy has faced mixed inflation signals recently, with energy cost, housing, and consumer demand influencing price trends. If CPI comes in higher than expected, it would suggest inflation is still present and still persistent, potentially prompting the Bank of England to maintain or increase interest rates, which could be bullish for the GBPUSD. If CPI matches the forecast, the market may react modestly, seeing inflation as broadly in line with expectations. A weaker reading would indicate inflationary pressures are easing, which could reduce expectations of future interest rate hikes and may push the GBP/USD currency pair lower. Well, as far as the price action of GBP/USD is concerned, it's already going down. I will talk more about the pound dollar in few minutes time. Now, I'm going to discuss potential markets reaction and different market scenarios. The forecast is 3.5% for the CPI number. Now, let's say we get a higher than expected number, like greater than 3.5%, then it means that's bullish for the GBP, and the likely reaction is GBP USD currency pair is going to rise up. And if the number comes in exactly at 3.5%, then it means the forecast matches the actual number. Then I would suggest kind of a range bound type price action inside GBPUSD currency pair. And let's say the number comes lower than the expected, less than 3.5% number. If that's the number we get, then it's weak sign and for the GBPUSD, and GBPUSD currency pair is probably going to drop. Well, it's already going down, by the way. The trend looks down over here. This is the daily time frame, and if we um, Draw a trend line over here. This is a downward sloping trend line. So price action is going down actually inside GBPUSD currency pair. The CPI year over year is a crucial indicator of United Kingdom economic health and a key driver for Bank of England policy expectations. Forex traders should monitor not just the headline figure but also any commentary or breakdowns uh, for breakdowns, and we get some sort of insights into future monetary policy. Even a small surprise can shift short-term GBPUSD sentiment, making this release particularly important for forex traders. As far as the GBPUSD forex traders are concerned, they should watch the first few minutes for immediate reaction and then assesses follow through based on broader market positioning and liquidity. So the key takeaway is the CPI year over year is one of the most closely watched indicators, I would say financial indicators, for the British pound. Any deviation from the forecast can influence GBPUSD currency pair direction and impact expectations for Bank of England's policy. The next one is the German Flash Manufacturing PMI related to Europe. So let's discuss it. Now, what is German Flash Manufacturing PMI? The German Flash Manufacturing PMI provides an early estimate of manufacturing activity in Germany based on surveys of purchasing managers reporting on production, new orders, employment, and overall business sentiment. A reading above 50 indicates expansion in the sector, while a reading below 50 signals contraction in the economy. The stronger than expected PMI data typically supports the euro, reflecting healthier economic conditions in Germany and the wider Eurozone. Conversely, weaker data can put pressure on the euro and influence short-term euro-dollar movements. The date and time is November 21st, 8:30 a.m. UTC time. So the report is going to be released on November 21st, 8:30 a.m. UTC time. The previous number we got was 49.6. The forecast is 49.8, which is closer to 50. The actual data not yet released. Forex participants are focusing on Germany's flash manufacturing PMI scheduled for release at 8:30 a.m. UTC on November 21st. As the Eurozone's largest economy, Germany's manufacturing activity serves as a key indicator of broader regional economic health. A reading above the forecast of 49.8 would signal stronger manufacturing momentum, likely supporting the euro, while a lower figure may indicate contraction in the economy and potentially weighing on euro dollar currency pair. If you take a look at a price chart of euro dollar currency pair right over here, this is a smaller time frame 4-hour chart. So the way I see market is trying to fall over here, and it's quite possible that euro is going to drop a little bit more. I will discuss more about the euro dollar in a minute. But if you take a look at this daily time frame, market is trying to uh, drop overall. Okay. Now, as far as the PMI number is concerned, if the PMI comes in line with the forecast, the market may probably show muted reaction, reflecting steady but not accelerating manufacturing conditions, and the euro dollar is probably going to move sideways over here. Now, if the PMI number exceeds expectations, it would indicate that industrial activity is strengthening, boosting confidence in the German economy, and potentially supporting the euro dollar currency pair, and the euro dollar is probably going to rise up. A weaker than expected reading would signal ongoing weakness in the financial sector, European financial sector, which could reduce euro strength and prompt downward pressure on euro dollar currency pair. Well, the euro is already going down, so it's quite possible that if we get a weaker number, the euro dollar is going to drop more. So, in simple words, these are the potential market scenarios. A stronger than expected number like greater than 49.8 per 8 number signals bullish euro, and the euro USD is probably going to rise up. If the forecast matches the 49.8 number, then euro USD is going to move sideways. And if we get a weaker number, I would say less than 49.8, then that signals contracting manufacturing, and euro USD is probably going to drop more. So the key takeaway is the German Flash Manufacturing PMI offers an early snapshot of industrial conditions in Germany and is closely watched for insights into the Eurozone economy. A stronger data can reinforce euro strength and improve market sentiment, while disappointing figures may trigger caution. Forex traders should also consider sector level details and commentary, as they can provide clues about future European Central Bank policy outlook and broader Eurozone growth prospects. Early market moves can be sharp if the data significantly beats or misses the expectations. So traders should monitor both the headline figure and any detailed commentary for guidelines and guidance on near term euro US dollar positioning. The German Flash Manufacturing PMI is a critical early indicator for euro dollar. Even small surprises can shift short term euro sentiment and influence market expectations for European economic conditions. Now, let us take a look at euro dollar and GBPUSD currency pair first. Regarding the euro USD, this is what I've showed you earlier, that the trend is up in euro dollar currency pair. However, we got this breakout of this bullish trend line, which is suggesting that market wants to drop over here. Let me change the color. So market is probably going to move sideways, and as far as the technical analysis is concerned, it looks quite possible that euro dollar is probably going to rise up after uh, moving sideways for a few trading weeks. Inside the daily time frame, I'm expecting euro dollar to drop a little bit more to retest this broken trend line and then probably rise back up over here. Next one is the GBP USD currency pair. GBP USD currency pair, the trend looks bearish, and we could get a possible more drop in price action. However, the way I see market is probably going to drop first, and we might get a bullish breakout over here in the coming trading days. So that's the forecast for the GBPUSD currency pair. Next one is the US dollar versus CAD. Okay, regarding the US dollar CAD currency pair, it's trying to move a little bit sideways over here. The way I see USD CAD is probably going to rise up one more time, and then expect further weakness in market of US dollar versus Canadian dollar currency pair. Overall, it is still moving inside this upward sloping bullish trend channel over here. Okay. Next one is the spot gold. Spot gold actually rallied up quite nicely. This is the weekly chart. If you take a look at a daily time frame, this is where we got the breakdown in the market. So it's quite possible that the spot gold is going to move sideways, and then it's probably going to drop in coming trading days. Okay, if you have any questions or comments, feel free to type inside the chat box, and I will be happy to answer your questions. So, what we have learned today, let us review. Well, we discussed about the consumer price index CPI related to United Kingdom, and I have discussed the GBPUSD currency pair. Then we also take a look at German Flash Manufacturing PMI related to Europe zone or Eurozone, and we discussed the Euro dollar currency pair. And these are the forex trading instruments. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, November 25th, 2025 at 12 p.m. UTC time. So that's it for the timing from my side. Have a nice day and bye bye.